Well, good weekend all. I'm Epstein, and here we are on Saturday. It is the 3rd of August, 2024, and I am recording your SPDR ETF stock market wrap-up as I'm watching the Olympics all day. My muscles hurt from watching it. I love it. Every 4 years, I look forward to the Summer Olympics. Love the winter, too, but I like the summer more, and it's fascinating to watch. All right. I'll give you something else fascinating before we go to the markets. Let's take a look at what moved the markets so much on Friday. And you know, it was the non-farm payroll. You went down to 114,000 jobs from the expected 185 from CNBC, 175 from Bloomberg. But unemployment went up more than anyone thought at 4.3%. That was not in the guessing. It was expected unchanged. And they revised down the June number from the 206 to 179. The important thing is we're still growing, and in all honesty, if it were 114, in the history of job making, it's not a bad number. But the market doesn't view it that way, and we'll get to that in a minute. The average hourly earnings fell. They went from 3/10 expected, only to 2/10 gain in year over year, down a tenth to 3.6, okay? Now, here's the important thing. People with a job but not at work due to weather alone in July, the Labor Department, not me, figures, this is the Bureau of Labor, that 461,000 people didn't make it because of Hurricane Beryl. This is history showing all the rest of this. Do you see that? I don't. So, is this going to stay with those people not being able to work, or are they going to come back onto the work roll as new jobs in August? Something you have to think about, okay? When we get to Monday morning, the ISM data is at 9 o'clock. You're going to get new numbers. They're expected to grow, expand back over 51. And the Global Group released their final, and the word is final, July service sector PMI at 845. But the growth is interesting here if it happened. It tells me, yes, that is the reality, that these jobs that you didn't create, there were fewer, was weather-related. Probably the unemployment claims also jumped for a reason. Why do you think? Because in the auto industry, what takes place is they retool in the month of July. So a lot of people were let off. They're coming right back to work. But they go off, they come back on, and that's how it works with it. And sometimes it takes 3 weeks or so to retool to get the new product line set up, and then the auto workers are back. What I'm saying is, look for revisionments. Could I be wrong? Yeah, but I think that weather thing, I won't be wrong. I think it's important to point that out. But it doesn't change the picture. In the Nasdaq, you're down 10% from the recent highs plus. That is a correction territory. And what we know is the tech sector is under some pressure as we hear the common theme, the very common theme, oh boy, it's not paying for itself. Buying all these chips, getting these data centers going, that's not going to work. Let me share this with you. Total nonsense. Number one, it will work. Number two, like anything new, it always gets questioned. But if you've used it, and by the way, most of you are in rudimentary forms. When I type in on my phone, words come up as choices that maybe you're typing so fast as you're going, misspelling or grammar. It happens all the time. But I use Chat GPT too, and I try it out, and it writes really neat things for me. I didn't say they're accurate. I'm not interested in that. This is in its infancy. It's going to go and go and go faster and faster. Because all that AI is, and I think that people don't understand what it is, it's able to look at databases to start with or software ideas and build on it. Some can even learn from it. And it starts moving faster and faster and faster. And if it's garbage in, it's garbage out. But if it's garbage not in, that means you get good data out. The learning process takes time. You know, how often have you gotten frustrated? I still do. I have Comcast, and it says, say a certain thing to get a movie. I'll say it over, and it brings up the wrong one. It sounds like I'm saying, it shows you the word. I go, am I not speaking right? You know, things like that. This is part of that AI. We're all using it. Understand that. And it's only going to become more of it, okay? So as we come and we now take a look, and let me see if I can get this to work for us. Come on. I think I can. I really don't want to do that over if I don't have to. There we go. Let's go to Amazon. Sometimes these get stuck. And I'm not out for an Emmy award anyways. I want to thank the person that I took this from. You will get a free subscription. And by the way, typically Wednesday or Thursday, I'll ask you to write me. Now, don't write during the week. Write me then on my YouTube, and I will pick, and if I choose you, I will go with the chart that you want. Some of you give me these others, names. Some of you go with, I was looking hard this week at Berkshire and others. I just didn't choose them for a lot of reasons. And some of you will get me the short only or the long only version of something. Most people don't follow those. So keep it in the names or the spiders or something you see out there that I haven't followed. But Amazon's getting the heck beat out of it. It was roughly just recently here in the 204 area. It's come down hard. Okay, you're now approaching the 160 level. So this is a market that just fell 25% for all purposes. I mean, where I went to school, that's about where you're at. Maybe I went to a bad school. By the way, I went to school with Hillary Clinton. I don't know if any of you know that, high school. And her and I were on many student council together. My yearbook's got all these pictures. Lower highs, lower lows. Lower highs, lower lows under the 18-day average. There's nothing bullish here. The market is still staying to the downside. You can see how the market is sitting here just under the 168 level. It's under the Bollinger Band. What are the odds of staying under the Bollinger Band? 5% of the time. That does not mean it's a sudden buy because the band's going to fall a bit. It can latch onto it and work its way lower. If it does that, the 145 level, which is the 200-week average, comes in, and resistance here. But what I think is going to happen is because you're fresh into down leg and momentum, if you were to just get a spurt in prices, anything near the 185 level, I think you'll find willing sellers there with stops over the 190.60 level looking for further decline. So I'm still in the bear camp. This is the week that you heard me say in XLU. It's the first challenge of the upper Bollinger Band with a non-embedded reading. I think the pros came out of long positions, and I've moved it now to a secondary chart. We covered it last week. Now it's off my radar. When I look at RSP, I want to keep this on our radar because it's the non-weighted S&P. You have a higher high, lower low. You stepped out of the uptrend, but you did not start a downtrend. This is a market that's now turned its way. Lilly is coming down pretty hard, which I like. Unfortunately, it's a $950 stock. I wish it would split 10 for 1. I think the following would improve much greater. But it is a market that is back into the 18-week average of closes. This is a general support area. If it were to collapse, and that's the word I want to use, it might go back to 686, but I don't see any reason for that. So I'm looking for this market in the sense of working off an overbought condition. Now, if you step back with me here, there were plenty of warnings of this that we had. If you take a look, this is the week of July 12th. The very next week, you lost the bullish embedded reading. My goal was to get back to the 18-week average of closes on it. We've covered this all the way through. Bingo. It's exactly what you've done. So on the downside, there's no reason for it to rally in this market all on its own. It would need either a product or general market momentum, and the momentum's against the market right here, and I don't know of a product. In CrowdStrike, I have said you don't want to catch a falling knife, and that's what you've got. Now, we are coming down to the first real major support of the 100-day average of close at 204, and I wouldn't be surprised if the market right in this area starts finding its legs. Now, it's got plenty of problems. It's going to have problems with lawsuits. I don't know how much of that is built in. It's going to have problems with existing clients. If I had it, I'd be saying, I've been impaired. What are you going to do for me? And if they just are quiet, I'm moving to their competitor. They're not going to be that crazy. They're going to do things for existing people that got hurt. That'll hurt earnings for a while. So I don't know where this all settles in. Do I think it'll get behind them? Yes, I do. When we look at Meta, you've got a pattern here that if you take out this week's low, you re-enter the downtrend and you might be coming back in to the lower Bollinger Band. You right now have no trend. You have a higher high, lower low, and you're caught in the bands of the Bollinger Band and haven't gone anywhere. It was eventually going to happen. I looked at KRE, and you've heard me, if you're a subscriber, every morning say, what started this and got these people going is interest rates started to crack. And as they cracked, because this is the ETF that has the most exposure for banking to what? Commercial real estate, because regional banks are where the lending is done. But you got up to that 200-day average, the Bollinger Band, and you've heard me say as a subscriber, don't chase it. You could be in trouble chasing it here real easy. Well, what I think can happen is you can pull back to this combination, maybe. It's only $3 lower, the 50.23 to 49.87, and I think you'll find willing buyers there. And yes, you'll say, well, what about all the commercial real estate? Folks, as rates keep falling, and that's what they're doing, I'm telling you, I can hear the sigh of relief. Banks don't want to own these properties. If they find a way they can work with the owners of them, that those people put in more capital, and they may be able to raise it in certain areas. Other than that, they lose the building. That's the way it goes. But banks have built reserves. I don't think their problem's getting worse is the key. I think it's getting better. MCHI, until China does something that's real, forget it. You can't even track now the inflows and outflows of the daily stock market. They enacted a new rule. And it used to be, look at the sellers, buyers. That's over. They'll publish it a month after the fact or weeks after where it's useless to you. And the reason is they don't want you to know how bad things are. So this is still falling. The rest of the world understands their problem. When you look at XLI, you've got a higher high, a lower low. You're caught in these bands. And if you think you're coming out of them on that pattern, terrific. I don't. Number two, I think the industrial sector can be saved here with interest rates starting to break. Now, it doesn't happen right away. The reason the Fed would have to move on interest rates is they're seeing the consumers pulling back, the economy slowing down, jobs, you just saw that. And that means the consumer doesn't have that much money. So it goes through a churn, but I do think it can improve with the lower rates, and because those companies, they're very, very interest rate sensitive. In XLE, the energy sector, you're getting hit. Now, obviously, we're all wondering what happens in the Middle East. Is Iran and its surrogates from the Houthis, Hamas, Hezbollah, are they going to gang up on Israel? Are they going to do a surgical attack, or all fronts? I don't know, nor does anybody else. The U.S. has said they are moving their assets back into the region, and they're there. And, of course, you have the other people, NATO members, that have ships there. So Israel's got its blanket of cover. What I expect is Iran will be smart, prudent, and they will do a surgical strike, a painful one, but more surgical than opening up a permanent front now with Israel. Could I be wrong? Absolutely. Absolutely. I mean, they lost face. They basically, the message is emissaries from our surrogates come in and get killed. Any way you look at it. UUP, lower highs, lower lows, the market down to 28.40. In the gold market, okay, you're fighting here. So gold saw everybody, and I want to use that word very carefully. If you watch the futures, dramatic move. People buying it with abandon, driving the D's gold to 25.22 and then watching it fall $60 an ounce from there all on Friday. Silver goes up and crashes from its high, $1 an ounce. Those are big moves. And now you're fighting right through here. Am I bullish? Absolutely. Do I think inflation is going to get sticky and stay? Yes. Do I think that when the Fed eventually begins cutting the rates, that initially you look down, but what's the purpose of cutting rates? To spur things on. If you're spurring things on, you're going to create demand. If you're going to create demand, last time I looked, that is in many ways not deflationary, it's inflationary. Now, it could stabilize inflation, that I can see, but don't tell me it's going to drop it. So I like gold long term. Copper, down to zones that it's at the first major zone, but if it lets go from here, it can go to 38 to 36.90 zone easily, all right? And the reason is China's got to do something to spur on demand. They consume 50% of the world's copper. So as much as they go, well, our exports are doing this and that, the market sees what they're doing, and the market's not stupid in the way it goes. All right, that's one of my charts, and that's a blank part that I use all the time. I want to remind you that at 6 in the morning, I record a futures video for subscribers that is used, and you need it if you're a SPDR ETF trader. Why? DIA, QQQ, TLT, BND, they all count on what the futures are doing. They're based on what these products do in many ways. Energies, they go on and on, USO, there's so many I can name, GLD, SLV, they all count on it, COPX counts on it. So you go and you look at those. So I start at that. That's out for the traders before 7 in the morning. Now we know what's going on, and you're looking at that when you wake up and you do whatever. And then shortly after the market opens, at 8:30 it opens, I let the first waves of money come into the market. Why? You know there's an aftermarket that trades in all these stocks. I let that money have to be blended back into what pricing did, and that's how prices get determined, because if you look at the aftermarket, it gives you an idea where the markets are going to open. Then the funds come in, do what they do, and you get a few reports coming out at big ones between 7:30 and 9 in the morning, and then I'm ready to rock and roll with you. The charts will look like this. I will mix Monday through Friday, the daily charts, then go to the weekly. On the weekend, I will do the weekly and then go to the daily. And there's more studies in them. You're going to get window envelopes. You got your Bollinger Bands, more moving averages than you see here. I explain and teach all the way through. And what is the idea? To throw out trade ideas. And I follow up on them every day, the ones I throw out. You'll see ones based on weekly recs. We have trades on 7, 8, 9 months longer. We'll have other trades one day. Not that they won, probably lost, but sometimes they win. And then other times you're trying to carry them to whatever point they'll go with you. IRAEpstein.com research, you can go there to take a look. You can move your cursor to the top here, and I invite you to do that. It'll take you right there, and if you have questions, just give my staff a call. With that, I'll catch up with you all Monday. Have yourself a remaining great weekend. See you then.